Hey, this is Bitcoin Asset Research with Allard. Today I'm going to talk about MicroStrategy being added to the Nasdaq 100. This is absolutely fantastic news for MicroStrategy shareholders, and I'm just going to discuss what it means in this video, go through some of the economic implications. So the bottom line up front is that more capital is now immediately accessible to the stock and to Bitcoin more than ever before. MicroStrategy is Bitcoin's only investment bank. This is a topic I've covered in the past, and you can check it out in this video over here. MicroStrategy, this view changes everything. Thanks to the company's capital structure, MicroStrategy is functionally a leveraged version of Bitcoin. So its securities are effectively Bitcoin-backed securities. And this has been the true business model for a very long time now, but it's really accelerated in 2024. And that business model involves taking Bitcoin's risk and return profile and chopping it up into pieces for different classes of investors. So we can go through some of those classes right now. We could have Valerie, the volatility arbitrager, and Valerie might be interested in buying MicroStrategy convertible bonds and warrants, and then trading the stock in the spot market against the gamma that is implicit within those products. Gamma, of course, is the second derivative of an options price with respect to the price of the underlying stock. And volatility and gamma are closely related. So a volatility arbitrager might buy some of those products and then trade the spot market in order to earn a return. And we have Barry, the bond fund manager. MicroStrategy's bonds have been absolute outperformers, and anyone who has bought these bonds are up quite a bit. And Barry might be interested in creating some outperformance, some alpha in his fund for his clients, so he might be interested in buying some of MicroStrategy's bonds. And then we have Rhett, the retiree. Rhett is simply interested in having a comfortable retirement, so he wants some kind of cash flow that is steady and reliable, and so he might be interested in buying MicroStrategy preferred stock. Now, just to be clear, MicroStrategy does not currently issue preferred stock, but this is an idea that has been floated around in the past. And of course, you have myself, Allard, the American Bitcoin Maxi. You don't have to be an American to be a Bitcoin Maxi, but I just thought I would stay consistent with the alliteration that was going on. Now, I only care about companies that can grow Bitcoin per share over time, and MicroStrategy being the company that has done that most efficiently over the last 4 years, this is a company that I am interested in holding. So in that case, I would hold MicroStrategy's common stock. So you clearly see there are 4 classes of investors, and MicroStrategy is able to create an instrument that services each of these 4. And in return for doing this, in return for providing this risk and return profile that derives from Bitcoin to each specific type of investor, the common stock MSTR earns a Bitcoin yield. And this is defined as a period-to-period increase in BTC per assumed diluted share. So assuming all of the options and convertible debt converted at the moment, that would be the amount of total shares used to compute Bitcoin per share in the denominator. So it's really the most conservative estimate of how much Bitcoin per share there is. And when this number goes up over time, that is what's called a BTC yield. If any of this does not make sense, then you just do not understand the company and you need to do some more digging. I encourage you to watch some of my previous videos and you'll get a better perspective of what this company does. Now, what does this have to do with Nasdaq 100 inclusion? It means that MicroStrategy has just gained a new customer, a new investor profile that is much larger than Valerie, Barry, Rhett, and Allard combined. That customer is the passive funds which sit in the many Nasdaq 100 related investment vehicles. And we can kind of see that here. We have the QQQ over here, and this has an AUM of $327 billion. We have the QQQM, which has an AUM of $39 billion. This is the QYLD, which is a Nasdaq 100 covered call ETF. It also holds the component stocks within the index, and then it sells covered calls to generate a monthly yield. And this has $8 billion in net assets. And of course, we have some random mutual funds here and there. This is the Victory Nasdaq 100 Index Fund. And it also has quite a bit of assets. Here we see $7 billion of assets. This is hundreds of billions of dollars in assets in total that go towards passively tracking the Nasdaq 100. Because MicroStrategy shares is a product and the passive indices are compulsory price-insensitive buyers of this product, it means that the earnings potential of MicroStrategy just increased because of the capital that is sitting in these investment vehicles. If you like this video so far, I just ask you to like it, subscribe to the channel, share it with a friend, leave a question or a comment, help me expand the reach of these videos, and help me make these videos better with your feedback. Now, the potential for raising capital just increased, which means that BTC yield, the potential for BTC yield has also increased. So even if you don't want to view MicroStrategy as an investment bank, you can still recognize that index inclusion is a massively bullish event because it means passive flows coming into the stock. This is a pretty well researched phenomenon, and it has been well established that index inclusion lowers the cost of equity capital, and it gives the companies within the index a much bigger advantage. This is one of the reasons why bigger companies get even bigger in today's economy. Passive indexes is a huge component of this. But something very special happens in the case of MicroStrategy. This is the first time in history that a chronic equity diluter will be added to a major index. And unlike normal equity diluters, this company actually increases in value while the dilutions happen. This is a very important point. The dilutions cause an increase in value. And this is very, very strange. We can look at how dilutions normally happen. First off, a company wouldn't even dilute unless it was struggling. So they'll sell the stock, they'll get a bunch of money from investors who buy the stock, and then they'll squander that money on something that doesn't really make sense. And the company and its shareholders would be in an even worse situation than before. Now, MicroStrategy's dilution profile kind of looks like this. It issues stock, it buys Bitcoin with the stock, it generates a BTC yield, and all the shareholders recognize that this is more value that has been realized to the common stock because now Bitcoin per share has grown. And this concept in and of itself is extremely powerful because it means that this company is a chronic equity diluter. Dilution is part of its literal business model. And of course, this is very, very different from what you normally see. Passive indices will cause 4 forms of capital inflow into MicroStrategy. So the first is the initial buying when the stock gets added. And to be clear, all stocks that enter an index, all stocks experience this. So every stock that gets added to the index has this initial inflow. And then the next inflow is going to happen from regular rebalancings. And these inflows only happen to the stocks whose weights in the index increased. So in a market cap weighted index where every single stock's allocation is dependent on the market cap of that stock relative to the other market caps. Inside such a market cap weighted index scheme, a stock will only get this rebalancing inflow if and only if it is outperforming the other components of the index. The third capital inflow through these indices is new buyers of the index. So when someone puts their paycheck into the Nasdaq 100, that just became a cash inflow into the index. So now the managers of the index fund will take that money and buy the components of the index in the proper proportions. And so all stocks within the index will receive this inflow. However, the stocks whose weights have increased more will obviously receive more of this inflow. And the fourth one is extremely important. It's issuance-related inflows. And only MicroStrategy gets these issuance-related inflows. So let's just go through an example to see how that works. So this is the dilution or the issuance-related inflow example. Let's say a company, MicroStrategy in this case, but let's say a theoretical company has 100 shares and a 1% weight in the index. So after you rank up this company's market cap with all the other companies in the index, you get that the company is supposed to have a 1% allocation in the index. And let's just say that based on how much AUM the index funds have, they own 30 shares in total, which is 30% of the company. 30 shares out of 100 shares, that's 30% of the company. Now assume that the company creates another 100 shares. So now this is the dilution happening. The company creates another 100 shares and its weight in the index stays exactly the same. Remember that share creation would not increase the market cap, assuming all else is equal. You cannot just create shares and expect that the market cap increases. So the 30 shares held by index funds would only represent 15% of the company now, rather than the original 30%. Because if you create another 100 shares, you have 200 shares outstanding, 30 shares in the index funds, 30 divided by 200, that's going to be 15% of the company. Meanwhile, the market cap of the company would be the same and the share price would have gotten cut in half. This would be the only way to make it work. If the market cap stays the same and you increase the amount of shares by 2 times, then the share price must be cut in half. So this means that some of the market cap basically leaked out of the index funds. So if only 30% of the company was how you got to 1% weight in the index, then now only owning 15% is not going to make it, and it's not going to be enough to track the index faithfully. So what's the solution to this? The index fund must buy some of the issued shares until they get back to 30%. So remember the assumptions here, right? Like we have to be clear on what we assumed at the beginning. The market cap doesn't change and weight in the index does not change. But in reality, both of these things are not the case because MicroStrategy increases both the market cap and the weight in the index because it's going to outperform the other stocks. Both of these things are increasing. So that takes us back to square one where the regular rebalancings is going to cause an inflow because the weight in the index has increased. So at this point, you can probably see why index inclusion is so bullish for MicroStrategy in particular. Here's how we can really summarize it. The company generates its superior returns by buying Bitcoin. It buys Bitcoin by issuing securities, and now it is in a position where an enormous pool of capital, remember about a few $100 billion of capital, is going to buy its stock at any price. So the index funds do not care what price it is. This is how passive indexing works after all, right? Like the whole concept of it is we're not going to care about the valuation and we're just going to keep piling into the stock because owning a broad basket is diversified. And to take further advantage of that, the more superior the returns of MicroStrategy, the more this source of capital will buy its stock, which means the more MicroStrategy can generate superior returns by buying more Bitcoin. So you can see that this is a very strong positive feedback loop. Now add in the option dynamics at play. MicroStrategy has more options volume than anything else when adjusted for market cap. We can see that over here. Even when you rank up the stocks in the S&P 500, MicroStrategy ranks number 7 in this list, right behind 6 of the Magnificent 7 themselves. But when you adjust it for market cap, when you scale this options open interest or options daily traded volume by the market cap of the stock, MicroStrategy is number 1 on all accounts. So this is definitely a stock where the options are extremely popular thanks to how liquid and volatile the stock is. Now that's going to be a lot of Gamma and Vanna that is waiting to be squeezed. If you want to know more about Gamma and Vanna, I cover it in this video. The largest squeeze ever is coming to Bitcoin. Here I go into some of the implications for options markets being introduced to the Bitcoin spot ETFs. In the event of such a Gamma Vanna squeeze, MicroStrategy can issue an enormous amount of convertibles to capitalize on heightened volatility. This is a point that I think most people do not really understand or talk about enough. This is a stock whose implied volatility moves up with its stock price. So here you can see the blue line is the stock price and the purple line is the implied volatility. As the stock price went higher, so did the purple line, so did the implied volatility. And as implied volatility fell, so did the stock price. And this trend has really been consistent, and it really gets exposed during these massive bouts of upside motion. And the most recent one where it went from about $130 per share to over $400 per share, that also showed this enormous rise in implied volatility. So during a squeeze where the stock price is going astronomically higher, that is going to be when implied volatility goes up. And it is specifically during these times when you can capitalize on the high implied volatility by issuing convertibles. And to be honest, this is one of my theories why we've mostly seen a bunch of at-the-market offerings, but not a lot of convertible bond offerings since MicroStrategy did the $42 billion capital raise announcement. This was where $21 billion each would be allocated to the ATM and to debt, which would be convertible bonds. Issuing convertible bonds into bouts of extremely high volatility would be an extremely great move because the interest rate on convertible bonds get lower as the stock becomes more volatile. This is simply because of the option value that is embedded within the convertible bond. As volatility increases, option value increases, which means the bondholder has a more valuable option that he is holding. And in very crazy scenarios, if volatility is high enough, it could also be possible for this kind of negative coupon bonds to emerge. This is a situation where Warren Buffett got into a negative interest rate bond where people were paying him so that he could borrow their money. And as you go through this, you can see that this also involves an option-like product. So higher volatility can be monetized in the form of a lower interest rate, which has been zero in the past, but sometimes can even be negative. Now add in the Bitcoin dynamics at play. MicroStrategy is cornering the Bitcoin market, and if MicroStrategy squeezes up, then it will be able to issue much more securities and buy much more Bitcoin. There will be a point where there is simply no more Bitcoin left to buy and the price begins a parabolic rally. So this would look like the market being effectively cornered. And that is going to push MicroStrategy up, since MicroStrategy is really just high beta Bitcoin plus an alpha in the form of its increased Bitcoin per share. The cornering action of MicroStrategy would create this self-fulfilling prophecy where Bitcoin goes up, MicroStrategy goes up, which allows MicroStrategy to buy more Bitcoin and push Bitcoin higher. And we can see something extremely crazy breaking out in this kind of situation. And finally, the last piece is that Bitcoin itself now has options too. This was the point of that last video, this one right here. Bitcoin itself has Gamma and Vanna that can be highly explosive. And there's no emergency supply creation when demand becomes insane because of absolute scarcity. So if any of this happens around index rebalancing time, if any of this squeezing and parabolic rallying activity happens around the index rebalancing time, then the index will be buying a huge amount of MicroStrategy and adding even more fuel to this already explosive explosive fire. Everyone knows when the index will rebalance. This is well established within the index methodologies. Consider the possibility that traders can front run or even set up the conditions for this to happen around rebalancing time. So perhaps they can buy up a huge amount of call options in order to manufacture the gamma and the vana building up within the market, specifically to happen around this time. Just remember that entropy and chaos will always find a way to erupt, and that Bitcoin as an asset is long entropy unlike anything else. This is really the bet that we're fundamentally betting on as Bitcoin bulls. Now, I do want to mention a few caveats here. The Nasdaq 100, the NDX, is pretty strict on quarterly rebalancing. The rebalancing stuff only happens during quarterly intervals, and that's not really a big window for index-related inflows. Next up, the Nasdaq 100 has very strict weight limits. So when you come down over here, you see that these are special stipulations of how the rebalancing must proceed. No company's weight may exceed 24% of the index. This clearly puts a hard cap on how much of the capital in the passive funds can be pushed into a single stock. Also, the aggregate weight of the companies whose index exceed 4.5% may not exceed 48%. So this is clearly another provision that prevents the big companies from really dominating the entire index. This definitely helps with Nasdaq 100's diversification, but it is something that puts a stopper on the passive flows from these index funds. So while it is true that this very potentially explosive dynamic is now at play and possible, there is this dampener effect from the way the index is constructed. Now, I do want to mention that the real fun begins when MicroStrategy is added to the SPX, to the S&P 500. To my knowledge, there isn't really weight limits on the S&P 500. Quarterly rebalancings is a thing, but rebalancings may also happen much more frequently. And of course, the S&P assets under management are much, much larger compared to the Nasdaq. This would be a fun topic to cover in a future video, so definitely stay tuned. If you enjoyed this video, be sure to hit the like button, subscribe to this channel, leave a question or a comment. I'm very responsive. Feel free to give me suggestions for future content. Thank you so much for watching, and I'll see you in the next video. Bye.